Hey, this is Justin with DayTradeTheMarkets.com on actually Valentine's Day, February 14th, 2014. And I thought what I would do today is look at both Thursday and Friday, which were both basically trend moves higher in the E-mini S&P, and talk about some of the keys that we like to look at to determine whether a market is more than likely in a trend mode versus more of a choppier consolidating mode. I mean, that's one of the most common questions that we get is how, and that traders deal with on a day-to-day basis is how can you tell whether a market is more in a consolidating mode, and you would obviously need to employ more of a fade-based trading strategy, and you're looking to buy the lows of consolidation and sell the highs of consolidation, depending on which direction the bias of the market is heading, or versus a trend market where you're looking for either to go with trades in a momentum breakout type of a fashion or more of a trend pullback type of a style. So I think that's an important. Obviously, it's an incredibly important distinction to try to draw and try to make sense of, and I think that this software can really help you if you understand what you're looking for. So I thought to give some examples, I would just look at yesterday's and today's trade and talk about some of the things that you see versus some of the things you don't see when a market's not likely to trend. So this is Thursday, the 13th, and we had a lower than expected open in the overnight here. You can see from yesterday or Wednesday's close to Thursday's open was a pretty nice gap down in terms of from close to open. So it certainly opened a bit lower than we would have expected. So when that happens, we want to just obviously determine, okay, is this something change overnight? Are sellers in control, or is this just an opportunity for buyers to swoop in and to be attracted to these lower prices? So let's wait and see. Let's see which side is more aggressive. And you can see we're looking at this 1808 level as kind of the first line in the sand that we'd want to monitor. And you can see the market had some level one buying, but nothing major. But it wasn't until we got through this 1808 level with this level 3 or extreme buying aggression bar that we start to get our first clue that buyers are coming into this market. And so, whenever, just going back to the original topic, whenever you get a level 3 buying aggression bar on the high of the day with some follow through, or a level 3 selling aggression bar on the low of the day with some follow through, now obviously they can get rejected and that can mean something, but when you get follow through on one of these, it's a pretty good sign that the market is somewhat off to the races. Does it happen every time? No, of course not. But you're rarely going to see a big move without that, and when you do see a level 3 bar on the high or low of the day with follow through, it's a good signal that the market is pretty strong, and you certainly at a minimum don't want to fight that. Okay, so when this level 3 buying bar comes in on the high of the day and our bias heading into the day is up, so it's in line with what we're looking at, you've got a couple of options. You can either just buy this as a breakout. The second option would be this is more what I like to do. I typically wait for a retracement to about the one tick above the low of that bar. In this case, it didn't happen. We had pretty quick follow through above this bar. So one thing you can also do is be a little more aggressive and buy it toward the high of the bar, right in there. That's certainly one thing you can do. Next, we then confirm these new highs are in place. Same idea here. Here's another level 3 buying aggression bar, so you can wait for a pullback back toward this low of this bar, or you can wait for, you've got some quick follow through. You can look to be a buyer toward the high of this bar. Now this one was actually worked out pretty well because you had this next level 3 bar that came in, so buying at the low of that bar coincides with being a buyer at the high of this bar. So this was a pretty nice spot to be a buyer yesterday as well. Same idea here where we have these two in a row. This is actually my favorite trade my favorite trade type where we've got two level 3 bars on the high of the day in a row. I like to try to be a buyer right at this sweet spot where they overlap. Now the market was so strong it didn't even get down there. So you can see then the market got to this next level up that we were looking at around 1819, had a little bit of resistance but fired through there, and then came back and tested it, got above this next level. And it wasn't until about 2 o'clock Eastern time on Thursday that we started to see a little bit of selling that finally got some follow through right in here. Okay, so what's this tell us? It tells us the market's going to more of a consolidation mode, at least in the near term, more of a two-sided market, where buying aggression was fully in control here. Every time we'd get a selling bar, it would be rejected, versus now we finally got some follow-through on a sell bar. So it doesn't mean sellers have taken over. It just means that we're more than likely into a two-sided type of a market scenario. That's on a Thursday. So to kind of recap Thursday really quickly, we had a gap down from the opening, and so we want to see, is this thing going to continue on or not? Is this thing going to head higher? And you can see that bulls came in. Pretty good idea. Second concept is when you get level 3 bars on the high of the day when they form with pretty quick follow-through, it's a pretty good sign the market is got some pretty good strength in it. Same would apply if you had level 3 on the selling bars on the low of the day. Okay, let's move over to Friday, which is today. And so we didn't have any surprise openings today. We did want to look out, and this is on our daily market assistant here, which is something that you can certainly go to as well. Just go to dailymarketassistant.com. You can get a trial, but on our ES page here, we were looking to be a buyer in a 23-25 area, maybe the 18-18 area, and then monitor some of these other levels as well going forward throughout the day. But certainly our bias was up. We were looking to be on the long side if we could be. So that's what these lines are here. So this is our bigger picture analysis. So by combining bigger picture analysis with the shorter term structure of the market, it gives you certainly a better edge than not having that. So opening up the day, we opened between this basically 1823 and 1827 area right in here, and you can see it took a while for the market to figure out what it was going to do. We rallied up to the 27, came back and tested new lows, got rejected on this level 2 selling bar at these new lows, which is a pretty good sign actually. If you're, this is the ideal spot that we're looking to get into the market, 1823 quarter, and we get rejection of lower prices pretty quickly. It's telling you, okay, this is a pretty good spot, and now you're getting some confirmation. You get even more confirmation when we have the breakout here on the new high of the day a little after 10 o'clock Eastern. Okay, same idea. You want to wait for the pullback here or just buy toward the high of this bar? But again, you're getting confirmation with quick follow through on a level 3 buying aggression bar, not to mention this rejection at this key level of selling, that bulls are certainly in control, and at a minimum you don't want to fight that. You don't want to be getting short on the day like today. So you can look at that as potentially a trend day developing. We see more confirmation of that with this level 3, next level 3 buying aggression bar that pierces through this 30 level. You could either go with that. It got rose 3 points from there before it retested this 30 level. You could look to be a buyer when it retests this level. We came to within a tick of the low of that bar right there. Then we had higher, another new high of the day with a level 3 bar. Okay, and that was around 1833. It rallied a good 5 points from there over the next hour and a half. Kind of a slow grind higher, but it's telling you don't want to fight that. This is our first situation where we start to get this is our level 3 bar had its low, buying bar had its low taken out. We had some strong selling coming in. So it's telling you, okay, this wave of buying control is now more of a two-sided market. So, just again, the point of the video is to show, one of the major clues, the major things you can look at to determine whether we're likely to have a trend day, and so that at a minimum you don't get yourself in bad trades, and at a minimum, and another minimum, you can be more likely to hold on to a trade a little bit longer. Is, do you get a level 3 extreme buying aggression bar on the high or low of the day with some quick follow through? When that happens, you certainly again don't want to fight that, and it's a pretty good sign that it is a trend type of a day. There's a lot of ways you can work with that. So let us know any questions you have about that, but have a good weekend, have a good holiday day Monday, and we'll talk soon. Thanks.